We got to sort of address the market as things stand right now. And so let's just start to do that with a quick few things that you need to know as we begin another session. So we've got a situation where the Nifty is now getting its road clear. I mean, you know, the sides are clearer a little bit more to the all-time high. Why do I say that? Because we've been kind of battling around this 19,875 levels for a while now. We finally closed above that yesterday. Overnight cues are positive. Nasdaq ended about 0.3% higher. And you had, you know, a historically hawkish Fed Governor Waller, who actually voiced optimism about the current policy stance, which is to say that he kind of said, well, we've done enough and we got to wait and see to understand the implications. I mean, if you want to just exactly hear what he said, and I quote, if you see this lower inflation continuing for several more months, I don't see how long that might be, 3 months, 4 months, 5 months. You could then start lowering the policy rate because inflation's lower. So that's that. And coming from someone who's been historically on the hawkish side, I think that made the difference. Yields fell. The US 10-year fell to about 4.3% or so. That's come off very, very sharply over the last few sessions. The dollar index down about 0.5%. We are just under 103 levels. 102.72 is where we left off. Oil prices jumped about $2 to about 81.6. There is an OPEC Plus meeting tomorrow. Of course, this is the delayed meeting that we have been talking about. We'll see what happens and comes out of that. Now, just to circle back to levels here, with 19,875 out of the way, as I said, the road to that 20,222 level becomes clearer, which is, of course, the all-time high. Support comes in, the very near-term support comes in at the 19,768 kind of levels. If you want to, on the journey to the all-time high, I mean, very near-term resistance comes in at the 19,926 level. That is nothing but the 78% retracement of the entire fall. I mean, you look at the 3850, 61 point, the Nifty is past all of that. The final level is 19,926, which is a 78.6% retracement. On the Nifty Bank, which has basically been the weaker of the two indices, but which has started to participate over the last 4-5 days, you know, we basically have resistance coming in at the upper end of the gap area, which is basically the 16th of November. There was a gap. The upper end of that gap is 44,064. That's the first resistance. The immediate support for the Nifty Bank comes in at about 43,610, which is nothing but the 20-day moving average. So very near-term levels on both the Nifty and the Bank Nifty. The big Q, I mean, and I think that is the Gift Nifty is indicating a higher start, etc. But it's unlikely that we'll get past this hump before we get to, you know, the new highs one way or the other, which is state election exit poll results are due tomorrow evening. So, you know, we basically will get a reaction on Friday based on, of course, how dramatic or sedate these results are. And then, of course, on Sunday, you get the actual results to which the market will react to. But, you know, the fact is Friday is going to be an important day politics-wise because of those exit poll results. Sonia.
Going to be a good morning of trade. The Gift Nifty is suggesting an up move of almost 80-odd points. Now, remember, we are on the road to new highs. The Nifty is now just 300 points away from those all-time highs. And the Gift Nifty is suggesting that we get to that 20,000 level. It's about 1.6% away from all-time highs. And the mid-cap index is the one that's really been the star of the show this month. It's up almost 9% in the month of November so far. Yesterday, what happened is both foreign and domestic investors bought in the cash market. So that's always a good thing. FIs bought almost 800 crores, while DIIs bought about 1,300 odd crores. US markets have been stable, so no problems there. The Dow is up about 85 odd points, but all eyes will now be on the state election results that come out on Sunday. And in anticipation of that, maybe some volatility, but the going is really good and looks like, you know, that's the way it's going to be today.
Well, that's right. The Nifty appears it's on course to go ahead and, you know, hit those fresh all-time highs. Only the state elections, that's the only problem in the middle. Otherwise, the entire global setup is looking good. And one thing that's worked for us is the FI buying has returned in the last 3 sessions. But I look at the net institutional number in the last 2 sessions, it's been more than 2,000 crores, which is fairly encouraging. Now, yesterday, besides the strong institutional flows, well, you had an element of expiry that played out. So the Nifty Financial Services Index, that took off at around 132 in the afternoon. And that's what helped the Nifty as well to move up. And when you have both the pillars of the market, that's the Nifty Bank as well as the Nifty IT Index, both of them did well. And that's why we managed to put on a good amount of weight. And that's why the Nifty managed to score a century in yesterday's trade. How are the FIs positioned? Yesterday, they added more longs than shorts. And now the short positioning has come down from around 89% to around that 76% odd. And since we have the highest open interest at around the 19,800 put on the put side and the 20,000 call on the call side, well, we get our levels up for you on the screen. So just adjusted for that, You have the 19,780 because 20 rupees is the premium out there. That becomes a near-term support. On the upside, 20,030 is the resistance because 20,000 call has the highest open interest. The premium out there is around 30 rupees odd. So both those levels come up for you on the screen. And what's going to be very, very important for the Nifty to get to fresh all-time highs is the Nifty Bank. It has resistance at around the 50 DMA, and then it'll have to combat the 100 DMA to get to those highs. So the start is in the green. We need to build on from there and get past the 20,030 odd mark. That's a bit of a resistance zone, according to me.
Okay, let's get